Alibaba, a sleeping giant awakens. Alibaba, the Chinese e-commerce giant, is back. They've been through a rough patch. Regulatory hurdles, competition, you name it. But guess what? They're coming out stronger. Alibaba is firing on all cylinders. Their recent earnings? Stellar. They're crushing it in cloud computing. And get this, they're buying back their own stock hand over fist. That's right, they think their stock is undervalued. And you know what? I agree with them. Alibaba is a company with its finger on the pulse of the Chinese consumer. They're innovating like crazy. From e-commerce to logistics to digital payments, they're everywhere. And let's not forget about their cloud business. It's growing like a weed. Alibaba Cloud is already a major player in the global cloud market. And it's only getting bigger. This isn't just some flash in the pan, folks. Alibaba is a structural growth story. The Chinese middle class is expanding rapidly, and they're hungry for everything Alibaba has to offer. This is a company with a long runway for growth. Now, I know what you're thinking. China? Isn't that risky? Look, there are always risks when you invest in any market, but China is also a massive opportunity, and Alibaba is the best way to play on that opportunity. So buckle up, because Alibaba is about to take off. Let's talk numbers, people. Alibaba's revenue is soaring. They're growing faster than Amazon. Their cloud business is booming. Profits are up, way up, and they're returning billions to shareholders through stock buybacks. This is a company that knows how to make money, and they're not afraid to share the wealth with investors. They announced a massive share buyback program. Why? Because they believe their stock is dirt cheap. And I'm not talking about a small buyback here. This is a multi-billion-dollar commitment. They're putting their money where their mouth is. That's the kind of management I like to see. Their core e-commerce business is firing on all cylinders. They're crushing the competition in China. And they're expanding rapidly into new markets like Southeast Asia. But Alibaba is more than just an e-commerce company. They're a technology powerhouse. Their cloud computing platform is one of the best in the world. They're even investing heavily in artificial intelligence. Alibaba is a cash machine. They generate billions of dollars in free cash flow every year. And they're using that cash to reward shareholders. Whether it's through buybacks or dividends, Alibaba is committed to returning value to investors. So don't miss out on this incredible opportunity. You better believe it. Let's talk valuation. Alibaba is trading at a significant discount to its peers. Compared to Amazon, Alibaba looks like a steal. Their price-to-earnings ratio is ridiculously low, and their price-to-sales ratio is even more attractive. This is a value investor's dream. And then there's the special dividend. Alibaba is giving away a chunk of its stake in Ant Group. This is a huge bonus for shareholders. It's like getting a free gift with your purchase. The special dividend alone makes Alibaba a buy. Take a look at the charts, folks. Alibaba has broken out of its downtrend. The technicals are bullish. Momentum is building. This is a train that's leaving the station. Don't get caught watching from the sidelines. This is a rare opportunity to buy a world-class company at a bargain basement price. Alibaba is undervalued, underestimated, and ready to roar. Don't wait for the market to realize its mistake. Get in now and ride this wave to profits. Section 4. Alibaba's challenges. Don't bury your head in the sand. Now, I'm not going to sit here and tell you there are no risks. Investing in Chinese companies comes with its own set of challenges. The regulatory landscape can be unpredictable. Competition is always fierce. And there are macroeconomic concerns to consider, but don't let these risks scare you away. One word: AI. Alibaba is investing heavily in artificial intelligence. They're using AI to improve their e-commerce platform, optimize logistics, and develop new products and services. But these investments are expensive, and it's unclear when they'll start to pay off. The global economy is facing headwinds. Inflation is still a concern. Interest rates are rising, and the war in Ukraine is creating uncertainty. These macroeconomic factors could impact Alibaba's business. Let's not forget about the geopolitical tensions between the US and China. The trade war is still simmering, and there's always the risk of new tariffs or sanctions. These geopolitical risks could weigh on Alibaba's stock price. But here's the thing about risks. Every investment comes with risks. That's the nature of the game. But the potential rewards from investing in Alibaba far outweigh the risks. This is a company with a bright future. Don't let fear keep you from participating in this incredible growth story. Section 5. Alibaba, a long-term opportunity you can't miss. Despite the risks, I remain bullish on Alibaba. This is a company with a proven track record of success. They're leaders in multiple industries. They have a massive and growing market. And they're led by a talented management team. Alibaba is a long-term winner. They're adapting to the changing regulatory landscape. They're investing in new technologies, and they're expanding into new markets. Alibaba is not standing still. They're constantly innovating and evolving. That's what makes them such a great investment. Don't be scared off by short-term volatility. The market is always going to have its ups and downs. But over the long term, quality companies like Alibaba will prevail. This is a stock you can buy and hold for years to come. The bottom line is this: Alibaba is a once-in-a-generation opportunity. This is your chance to invest in the future of China. Don't miss out. Section 6 Disclaimer. I own shares of Alibaba. This is not investment advice. Do your own research.